we've got three amazing experts here today. So I'd like to have each one of them take a couple minutes to introduce themselves a little bit more and answer this question for me. So this is about blockchain, crypto, whatnot. And I'm going to throw this idea out there for a second. I was hanging out with Ron Miller, who's a staff writer at TechCrunch last fall. And I'll be honest with you, I thought blockchain, all this stuff was hocus pocus. I'm a materials engineer by training. And so I'm if I don't see it, touch it, play with it, I don't believe in it. That's for the most part. And so he said something to me, though, that made me go, he might be onto something. And he said, look, the blockchain at the base level is a very interesting platform when it comes to data and the use of data. And he threw this hypothetical to me and said, you know, if a person has a driver's license and they're going to a bar and they just want to get into the bar, he said, if you use blockchain technology integrated into into the smart hardware for that driver's license, if we were to come up with a biometric ID, the bouncer only needs to know that the person is of age and is that person who should be allowed to go into the bar. They don't need to know the address, they don't need to know the age, they don't need to know anything else about that person on that driver's license ID. And it came to the point at which during that same time I was hanging out with Richie Etwara because we were at the same conference together, and he talked to me about data integrity and the veracity of data. And when he was talking about all this, that's where the light bulb really hit for me. I was like, okay, this could be interesting. So let's start off with that. So take a couple minutes, introduce yourself, and talk to me about the data veracity and how that plays in blockchain. And is blockchain real or is it just hype?
So I go first?
Yes, sir.
Okay, got it. My name is Brian Park, and I want to put a caveat out there. I'm probably the least qualified person to talk about crypto, and just sort of a disclaimer here. I have actually, I do news beats on Snapchat, okay? And so for all those who know Tien, he's a big Snapchat user. And so what I do is I actually do like, say, 20, 30 news beats a day, and I actually crowdfund or crowdsource my followers and say, hey, what's your favorite story? And then they'll screenshot it, right? And so I've been doing this for about a year and a half, and the last 8 months has been all cryptocurrency, all Bitcoin, right? And so by default, I became sort of the accidental, if you want to call it, guru on Bitcoin and cryptocurrency. My full-time job is I do run so I am the director of technology for one of our portfolio companies at the Fishbowl. So the Fishbowl, as you know, it comes out from AOL, and then we, because of Verizon bought out AOL, they moved our incubator to the Alley, which is now powered by Verizon. So we are actively looking for companies to be to join our incubator in blockchain, in cryptocurrency, AI, and stuff like that. So to answer your question, is crypto a real thing? I think absolutely. And so I'll just leave it like that, and I'll explain a little later. But I'll share
appreciate it. Hi, I'm Shahid Shah. I'm a serial entrepreneur. I've invested in a few different companies, but I've started 4 or 5 of my own, exited a couple of them. So I've been in the entrepreneurial world for a number of years. In the last couple of years, a lot of that has been focused on blockchain, crypto broadly, not cryptocurrency specifically, but cybersecurity and securing data in the internet. And the way to think about this is, especially for those of you who are not technical in nature, is that blockchain is really, really important for one reason, and that is disintermediation. So if you're trying to do blockchain today and you're not quite sure that you need disintermediation, you're trying to replace someone in between someone else, it's probably not for you. So when I think about big technologies like artificial intelligence, machine learning, deep learning, blockchain, I kind of categorize them this way: is if you're not quite sure about your business model and disintermediating somebody, don't worry too much about blockchain. AI, even if you don't pay attention too much, in the next few years, you'll catch up and everything will be okay. And then you've got deep learning and machine learning. With machine learning, if you're not already good at it, it's too late. right? So when you look at these kind of technologies, first and foremost, what I've learned as a technician, so I'm an engineer, I build systems, my focus in the last few years has been in business model innovation, and I'm an EIR at America's Health Insurance Plans Innovation Lab, and I've done a number of EIR type work for things like American Hospital Association or American Medical Association and those kind of things. What we're finding out these days is the business model innovation is dragging behind technology innovation, and that's where blockchain really comes in. It's not so much a tech innovation as much as it is a business model innovation. So in that regard, is it real? Absolutely. And blockchain is to disintermediation what TCP/IP was to networking and connectivity. If those of us who were working on TCP/IP in the early 90s knew that this was a multi-trillion-dollar business, it took a little while to get there. It took about 10, 12 years before that happened. Those of us in blockchain see the same thing, except for business model purposes. We're going to see new businesses that just weren't possible 5 or 10 years ago because of this technology. Then after blockchain, you can think about the token side of this, and this is somewhere I've been doing a lot of work, several new startups on how do you define a token, how do you interpret it, how do you calculate things, how do you score them, how do you rank them, all the gamification around tokens, gamification in this sense of the way that Loki was talking about it this morning. There's a ton of stuff necessary for tokens, and then comes crypto technologies associated with tokenization. Finally, then comes cryptocurrency. Cryptocurrency that's like if you think Vegas is too predictable, then go to cryptocurrency, right? Other than that, crypto tech, absolutely very real. Blockchain, absolutely very real. And token management is something that's absolutely here to stay and worth paying attention to.
So Raj, build off that a little bit, because so Brian's talking about it from just crypto, but blockchain's the fundamental technology that makes crypto work. So build off on that, especially because you're working on this in the healthcare space too.
Yeah, so my name is Raj Sharma. Thank you, TN. Thank you, CONNECTpreneur, for this panel. Really excited to be here. I think the best way to make this real is by talking a little about what HealthViz is doing, which I'm a co-founder and CEO of. So at HealthViz, we are building a mobile platform for consumers, you and me, to aggregate our medical records from different sources, hospitals, doctors' offices, your genetic test results. And then the application does the heavy lifting of normalizing the data, standardizing, so that you can sell that data to pharmaceutical companies, research companies. And so when I say this, most people ask me, well, why are you using blockchain? What do you need blockchain for? So as Shahid mentioned, for us, what blockchain provides the biggest value is disintermediation. So today, our medical records are being sold to pharmaceutical companies, to research companies. We don't get any benefit from it, but there are data brokers along the value chain who essentially take our data. So when you go to a doctor's office and sign those consent forms, you're essentially saying that, yes, you can sell my data. And that's what happens. So there are data brokers who are turning around and selling our data to all these pharmaceutical companies. So for us, from a disintermediation standpoint, that's what we are doing. We are essentially disintermediating the data brokers. Why? Because consumers, you and me, can sell our records or share them or donate them, but make them available to pharmaceutical companies in a peer-to-peer fashion, right? So then that's what we use blockchain for. There are other things that blockchain provides, like immutability and provenance and all that, but the disintermediation part, creating a marketplace, peer-to-peer marketplace, is the biggest value that we have. And then where does cryptocurrency play into this? Well, when I sell my records to a pharmaceutical company, I want to be paid for it. And the easiest way to get paid for doing transactions on blockchain is digital currency. So that's how we bring cryptocurrency into play. We call it digital currency, cryptocurrency, but that's how real it is for us. Our business wouldn't be there without blockchain and cryptocurrency.
So this is fantastic. Talk to me a little bit more, you guys, about the veracity of the data, though. How do you ensure that the data is actually accurate and is the right data? And in whose role it has to be the the unbiased mediator that says, yes, that is the most accurate data set, so you play with that. If we were to put blockchain into like credit scores, for example, use it towards that application, what is the means of ensuring that the right data is being utilized to effectively score you as you need to be? That's what I'm trying to get at.
Yeah, so one thing to think about is that so the entire purpose of the blockchain is to increase transparency over a multiple ledger that tells you. So the story is, if the four of us agreed on something to say, all right, every time I give any one of us something, I'm going to go write it down somewhere. So like a library card. I go grab a book from a shelf. In the old days, we used to write on the library card, Shahid Shah checked out this book on so-and-so date. The card was taken out. I took the book. I read it. If I didn't return it, the person read the card and said, okay, Shahid has this book. When I brought the book back, they put the book in and then crossed my name out. That's a ledger. It's a library ledger, easy for us to understand, but that's all the blockchain is. That library card is transparent to everyone. Everyone knows what you checked out and what you checked back in. And that's what the blockchain is doing for us today. So like in the case of HealthWiz, it's very cool because I can say, all right, I'm not giving the data to Raj. I'm not giving it to HealthWiz. I'm putting it on the blockchain, on Ethereum. I think that's what you guys are on. And that is the transparent part that all of us have agreed. I'm going to use that particular network. Now, the interesting part about that is you can't certify accuracy because accuracy has a business context that says, do I believe this number or not? What you can say is what's called immutability. Once I put it in, I know that it's not going to change. And if it does change, a new version of that data is created, linked back to the old version. So I'll know that you changed it, or I changed it. The second most important thing, especially in healthcare, is non-repudiation. Somebody cannot say, I didn't do that. Like in the library, I cannot say, I never checked out that book. Oh, yes, you did, because your name is on there. You took it out. In this way, it's very important to understand it's a common network. It's transparent to all of us as participants. Then I have immutability saying I can never change something old. I can only add to it, so I know what the distinct revisional changes were, and I can't repudiate it. Because that's what happens in a lot of these cases is, I didn't really do that, right? I didn't really sign that document. Yes, you did, because that's where today we use digital signatures and those kind of things, but there's still a central authority so the big problem with almost all of our technologies is it requires a central authority, and that's why we intermediate. We have brokers in the middle, we have lawyers in the middle, we have accountants in the middle to prove that these things are happening, because we can't trust each other on our own, or we don't have time to, right? But once this goes in, I mean, this is a big deal. 10 years, 20 years from now, there are going to be entire industries that just don't exist because the disintermediation, what you heard this morning in today's talk, trying to disintermediate fiat currency is a big deal. And it's possible. I mean, we all have to agree that we want to do that, but it's absolutely possible.
You look like you wanted, yeah.
So for HealthWiz, the integrity of data and veracity of data really crucial, right? So if a pharmaceutical is buying data directly from me as a consumer, how do they know that I haven't tampered with that data because I wanted to participate or make money off of my data, right? So that's where the provenance part of blockchain comes into play. So when I, as a consumer, download my medical records from the electronic health record system at Innova Fairfax or wherever, the hash of that information gets put on a blockchain. And so if somebody tampers with that data, then the pharmaceutical company would know that the hash is not matching and the data doesn't have integrity anymore. So that's one thing that we do in order to prove or verify provenance. The second thing is we don't actually put medical data on the blockchain itself because we are using a public blockchain, Ethereum, and because it is public. And the reason why we use public Ethereum is because we are targeting consumers. We want consumers to use our application and blockchain. So, for us, using a public blockchain is really, really important. And so we don't put data on blockchain, but we put keys so that Pfizer or Merck or whoever it is can access the data that's actually on your phone. We, as HealthWiz, don't see your data. We don't touch your data. And again, our philosophy is, look, we are disintermediating brokers. Why would you want us to be in the middle doing this brokerage business between you and the buyers of your data? So that's how we step out. But then we provide all this mechanism to verify provenance and to essentially maintain the privacy and security of your data by not putting it on blockchain, but just the keys to that.
Great. Brian, I want to turn it to you for a second. Sure. So we were talking outside about crypto and ICOs and people actually going to ICOs instead of VCs maybe for the funding. And then, as we're talking outside, also, you've got countries like China where they've made it illegal now. So talk to us more about that. What are we seeing? Where do we see that landscape playing? What is the West versus the East looking at it? Talk to us about South Korea and that issue with the moms over there who are yes.
Right. So just recently, I went to our flagship conference, Startup Grind Global, which is basically the poor man's version of TechCrunch Disrupt out there, because TechCrunch tickets are like $2,000, ours is like 500, and so we had like our biggest panels were all cryptocurrency and Bitcoin, but I think what came out of that was more of like, hey, is this a new form of alternative financing for startups? And I'm sure that's probably one of the main reasons why people are here, right? And so, about 20 years ago, I was working at Merrill Lynch, and I was a high-speed trader programmer. And I had to take my Series 63, Series 7, and I just remember the whole .bomb era was like, it was so easy to do an IPO, right? And so that when that popped, VCs were sort of picking up the pieces. And so, are we going to see a very similar trend here, right? Where literally anybody in this room can do an ICO in 6 minutes. I kid you not. You can go look it up on YouTube to do an ICO in 6 minutes. Anybody here can do it. The real question is that you have to have all the marketing behind that, and sort of like when you make a website, you're not going to be are you going to be creating the next Amazon? No, you have to have all this sort of built-in marketing and sort of like a buzz behind there. And so so the question here is that as startups are looking for an alternative investment vehicle, is ICO a legitimate form of raising funds, and so versus VCs? And so the way I see this with VC, the roles for VC, their operating role becomes very pronounced, right? Where in this sort of, there's a lot of noise happening right now, but what do VCs provide, right? First of all, it's funding, right? They have to be able to fund the startup, but secondly, it's operating structure. So basically, like corporate governance, product development, help with that, talent acquisition. And so when we have an ICO, that all goes away. Like you can't rely on 1 million people to give you your next CEO that's coming from the top flagship company to now join your startup, right? And so the question is that what is the role for VC and so early stage investors like the Fishbowl, like some of the angel investors in here. And so again, I feel like 95% of the ICOs are pretty much going to fail. They're going to go to zero, right? And so it's the other 5%. It's just the law of network effect that you're going to have major players. You're going to have 4 or 5 major players. The question is, is Bitcoin going to be that? So that's a different discussion. But the point is that is this a legitimate form to raise money for startups? And I think it's sort of the .bomb era repeating itself, right? And so I think if you have a great company, you have a great concept, then go for it. Do an ICO. You guys heard of CoinList, right? So CoinList is Naval Ravikant. He ran AngelList, right? And so that was sort of a syndicated platform, obviously, and many of you guys are on there, but basically you have to be an accredited investor to participate. And so now CoinList, they have about 6 million users on there. They're all accredited, and their first ICO was Filecoin, right? Mm-hmm. And so Filecoin was one of the biggest raises, right? But the problem with that is that they were using this vehicle called SAFT, Simple Agreement for Future Promise for Tokens, right? Which is based on SAFE, which is SAFE, which is basically a promise for equity in the future, right?
So promissory notes.
Well, that's like a warrant. Yeah,
warrant,
exactly.
Yeah, okay.
The problem is that, do you realize how big a SAFE note is? Like, how many pages?
Tell us.
It's 5 pages, right? And you're raising $100 million. Has anyone done an S1? Like, that's literally, I mean, that was hundreds of pages, hundreds of pages in doing a S1. Now
my mortgage documents.
Right, it's bigger, and then now you're going to do an ICO that's like literally 5 pages. Oh, plus the white paper, which is 20, so 25 pages to do.
There's
to
a lot
raise.
of trust involved there.
Right. There's a lot of trust involved. So again, there's a lot of things that we had to figure out, but I think it's going to be interesting to see how that shakes out. For at least
I think the way to look at it is realistically, it is true democratization and complete disintermediation, where you're saying, I don't need the additional value provided by me as an angel investor or someone else as an institutional investor or maybe even an entrepreneur. And think about it. So an initial coin offering is similar to the following. Suppose we bought an island called Nuco. And Nuco is out in the middle of the Pacific Ocean. It doesn't do anything today, but it's got a great amount of promise. So I say, when I create Nuco, that I'm going to invite all kinds of investors. I'm going to bring all kinds of people to my island. Here are the kind of people I'm going to bring in. There are going to be people who make warehouses. There are going to be people who make logistics systems. There are going to be people who do mining. There are going to be people who do all kinds of things. And these are all future things, right? I'm planning my country. In order to create my country of Nuco, I'm going to create a currency for it. That currency is going to be based on the, quote, tokens that my gross national product happens to create. So that currency, the currency in the United States is strong because our underlying fundamentals happen to be strong, and same thing with other countries. Now, if you think about the country of Nuco, you're going to say to yourself, well, who's going to be the president? Who's going to be the senators? Who's going to be the XYZ? And that's really what the white paper is, right? The white paper is describing my country of Nuco or my company, and it's going to say, these are the things that I'm going to do. This is the value that I'm going to create. These are the utilities that I'm going to run. These are the functions that I'm going to do. And what's really nice about that white paper is it reminds me of the early days of the internet, the Internet Engineering Task Force, the IETF, white papers that we as engineers used to write. We had, one person had an idea for TCP/IP, another person had an idea for UDP, there are hundreds of these standards that we all as engineers shared with each other, and that's what we're doing really with these white papers. We're saying, believe in me because of here's my ideas, here's what we're going to be able to do. And if you believe the white paper and if you believe the token, and when I say believe, I don't mean in the sense of faith like God exists, it's in the sense that there is an engineering document, somebody, like if you read the Filecoin ICO white paper, it's very believable. You can read word for word and you can say, I get it. It's really understandable. You read some of the stuff that HealthWiz is doing, it's very believable. These are not on faith, hoping that you need somebody in the middle to somehow describe to you what this future might look like. So as an investor, if you're saying, I know an industry really, really well, I know file sharing really well, I know healthcare technology really well, and if the entrepreneur can give me a non-glossed over, matter-of-fact, clear-cut white paper on why they are going to create value in this new country that they're creating or this the new company that they're creating, that is the ultimate in democratization of money, in this particular case coming from two different places. But that's something we're not accustomed to. We think we need the protectors in the middle because for hundreds of years people have stolen from us. But if you've got an underlying blockchain, you've got the ability to do wallets and in a secure way. You saw many startups today doing that. If we believe in all of that, where we don't need the intermediary, this is real. I mean, this is not one of those things where we're going to see. I totally agree with Brian that you're going to see 95% of them probably tank, but that's also because those countries would have tanked. They're not producing something of significant, long-lasting value. But the idea of the initial coin offering is here, and it's here to stay, and it's going to be more powerful than we can think of with initial public offerings. Like even if you see, for example, how many of you use Motif investing here? A couple of you. So Motif is a consumer-based system which allows you early access to IPOs. Well, why do I need that? If it's an initial public offering, everybody should have access to that IPO, right? Why do I need to have another intermediary tell me I'm offering you something in the middle? Because we don't trust it. That's why you need the S1. That builds trust. You have brokers and regulators. You need to enhance trust. You need integrity to say when transfers occur. But if you've got all of that in underlying technology, you don't actually need that. So this 5%, this 10% that do survive are making a massively new capability.
So talk to me, guys. Talk to me about the Ripple, because Ripple doesn't use blockchain as that underlying. So what was it that was making Ripple very interesting to work? And we were talking a little bit out there, but elucidate to the crowd.
Yeah, you want to take
Do you want to handle Ripple or?
No, you're right. Ripple doesn't use blockchain, and so quite honestly, for me personally, I'm a little bit surprised as to why there is so much appreciation for that currency. I think it's almost there are 2 or maybe 3 independent businesses at Ripple, and the XRP, I guess that's the token, has really nothing to do with blockchain and what they're doing in terms of international transactions. So I think, quite honestly, I don't understand why. I haven't invested in it. I don't understand why it is appreciating so much.
Yeah. So you want to say something?
Yeah, I mean, the thing is that if you see the categories of the tokens that are out there, right? I mean, you have like the cryptocurrency, which I still like to talk about the cryptocurrency stuff, right?
Yeah.
Because I'm a big believer of that. And then there's the protocol tokens, right? Utility tokens. And the question is that when people are doing ICO for these protocol tokens, just think about like if there was ability to partake in ownership of a bridge, so this like infrastructure, right? So infrastructure as a play, but just if you can now get a piece of that bridge, are you going to be a billionaire? Probably not, right? I mean, it's a utility. It's there. It's part of the infrastructure, and so when you have like traders and this is real. I mean, there's pump and dump going on, and just go onto Telegram, right? I just went on there, and I was on there this morning, and then you go to Ripple channel, and by the way, each of the tokens that are out there have their own channels. There's 10,000 people, talking on there, right? Talking about, hey, you should buy, you should dump, whatever, right? So there's a lot of market manipulation that's happening for what I call these like protocol tokens. But the real thing I think is, again, now I'm going to do a shift here for cryptocurrency, okay?
Yeah.
So I had to pull this out here. So obviously, this is $1, okay? This dollar doesn't care who I am. It's just happened to be in my pocket. I'm going to give it to you, but that's the dollar. So you can have it, right? So that dollar, so that transaction that just happened, right? Like right now, it's a physical transaction right now, and the question is that, fast forward 100 years from now, is that going to happen? I really don't think it's going to be all digital, okay? And the question is that going to be the underlying technology behind that? Is that going to be what we're seeing with blockchain, right? Where that transaction just happened, that you can't trace it back to me. Once you get it and you give it to the next person, can they trace it back to you, right? And so I'm a believer of that. I think that's going to happen. The question is that right now Bitcoin, that's the big mama right now. It only does 3 transactions a second, okay? And then Litecoin was like, hey, we could do more, 30 transactions a second, okay? How many of this transaction that's happening sub-dollar in the world, how many is that happening? That's literally 10 million times a second probably, right? I mean, transaction. So the question is is there a protocol out there that can support that? Right now, no. They're doing work such as like, okay, right now the blockchain is all the proof of work, and then they're working on what they call proof of stake, right? Which is now, it's basically just to make it simple. It's not having the whole network to do the consensus, but it's like they call it witnesses. It's almost like a republic. You have a few people doing it, and so that EOS is the top one right now. Theoretically, they can do millions of transactions a second. So just to put it in perspective, Visa, MasterCard does 20,000 transactions per second. Amazon, AWS, does 1 million. Now, EOS, could that be the protocol? So I think going forward, I think in 100 years, we're going to have this virtual transaction happening. Who's gonna power that? That's yet to be determined.
Yeah.
And that's what the fishbowl is trying to look for. We're trying to look for that.
Yeah. No,
so
I think it's a good thing to seek out. So one thing to go back to the Ripple question is The fundamental reason why the initial coin offerings and even currencies like Ripple are as popular as they are is that most of us sitting in the capital of the universe in DC area here believe that investments are easy to do everywhere, and they're not, right? The vast majority of the population of the world cannot adequately get their money invested in something realistic, gain a return on that, and then be able to trade it liquidly. It does not happen, right? It's a very small group of us in the entire world that can do that. So what you're seeing right now over the next couple of years is just pent-up demand from the rest of the world to say, let me in. We have a nice club where we do these investments and we call it protection and we call it evaluation and due diligence and everything else. What that basically means is it's a bunch of people that have money that they cannot invest in a way that they can get returns on. That's why Ripple is so popular, even without blockchain, because it's the token part.
Brian, you were telling me outside the South Korean moms who were, tell that.
Yeah. So a good friend of mine, Bernard Moon, who runs the Spark Labs accelerator, second largest accelerator in Asia, second to YC. And so he told me, and he's launching a 7th location, and he told me, Bitcoin, back in the day, it was the volume transaction was all coming, 70% was coming from Korea. And so back to your point about democratizing access to capital, access to opportunity, you would think, think about who would be the traders for Bitcoin, right? Male gamers, Asian Wall Street guys, right? FinTech guys? No. These were the housewives, right? And he was saying about 40% of the traders was that. It's almost like it's like the Tupperware. You can see the Tupperware party where they're like, hey, I got a tip. Hey, you should. Here's a coin. It's like what? What are they talking about? It's really amazing just sort of seeing the democratization of access to opportunity, right. Of great wealth, and it got so in a frenzy there in South Korea, they had to shut it down. So now it's illegal to do ICOs, and China's the same way. But it just gives you a glimpse of the future of what P2P is. It's literally, you download a software, you're an active participant. Just like the Napster's day, right? You download Napster, because you want to get a song, right? Now you're an active, you're a node, you are a peer on that network. And so the thing is, this is sort of like the internet. I mean, it's giving anybody in the world can now get access to these new.
It sounds also like
coins.
A subtle hint that South Korea, Estonia, very fast, very sophisticated digital networks, and that's where I think the action's also happening. Is that an accurate statement? A causality?
Yeah, I mean, I think so. I mean, if you have faster internet access, then.
And more importantly, the governments are willing to trade in those currencies. But more important, just think about that democratization part is really important, because you remember when Amazon first came out, it democratized retail, eBay democratized auctions, everybody could then do auctions, everybody could offer things, Etsy democratizing creativity, Twitter democratizing news. We are all people who are newsmakers now. We are all people who are creators. We're all people who can do auction. But that's not true of even if you have a lot of money and you're outside the United States, outside of major capitals of Western Europe, not even Eastern Europe. You could have a ton of capital. You have no way of accessing the opportunities available here in the United States and elsewhere for investment. And that pent-up demand for the next several years is going to create that churn that we see with ICO. They're going to pop up and they're going to fail. They're going to pop up and they're going to fail. But the technology is going to move fast enough to where we can prove that a ICO is going to be real and it's going to have significant value. But right now, we're just convincing people who have never had access to invest that they can invest, and they're like, oh, okay, let me try this out. And that's exactly why the popularity of Ripple is without blockchain.
I'm going to take my government hat off for a second. This is Nagesha speaking personally. Net neutrality. Okay, hat back on. All right, so I want to open it over to Raj real quick, because I want to take some time for the audience too. Talk to me a little bit about, we've been talking about healthcare, we've been talking about crypto. What other industries are poised to come about in taking advantage of or being disrupted because of blockchain? Also, talk to me about Vegas, because I was hanging out in Vegas with a good buddy of mine when I was at CES, and he's a senior exec at MGM. And he was, I'm not going to deny it, he was poo-pooing a little bit on all this. And I was like, that's odd. Wouldn't Vegas want to jump in on this? So, want to hear your 2 cents if you have any on that.
No, I think blockchain is going to touch every possible industry and possibly every human being on the planet. It's just going to happen. And the reason is technology in general just moves. It likes to move towards efficiency. And that's what essentially blockchain brings to the table, like Shahid said. You're disintermediating all the middlemen. And even when it comes to ICOs, we talked about S1s, and my question is how many people actually read S1s, right? When they're investing, it's really for the bankers, the S1s. So if I'm a consumer investor, and as long as there is transparency, so I can see the white paper and the financial statements on a monthly basis, I feel comfortable with the management team. I want to invest in that, and that's what ICOs do for you. So again, transparency is really, really important. And in going back to South Korea and China and some of those countries, what really happened there is those countries, some of the technologies were adopted much faster than in US. So for example, things like doing transactions using chat messages is already happening in South Korea. So the speed of transactions, the adoption of technology, much faster. So I think to a certain extent, some of these countries may be even ahead of US, and we have to make sure that our regulations and things like that don't really hamper innovation and progress. But I think overall, this is going to touch every single. I mean, it started with fintech, and that is actually interesting because I think that's the industry that's going to get disintermediated the first. But healthcare, of course, and anything that has a supply chain, the blockchain is a great application and a use case for that. So, and pretty much everything does have a supply chain. So it's going to touch every aspect of our lives. I think that I'm a big believer in that, and I think.
If I could just say one specific industry is the legal industry. We haven't seen the legal industry actually get touched in the technology revolution, but with smart contracts.
Making all the laws, though.
Yeah, that's right. So the smart contracts that sit on top of blockchains will allow you to, like, one problem we have with legal contracts is the reason why we need lawyers in the middle is I don't know what to say to you, you don't know what to say to me. The lawyer translates everything, puts it in the middle, and then we sign these documents. But they're not executable. I can't tell whether what you and I agreed on, you're actually doing, and vice versa. But with smart contracts, the right lawyers putting in the right smart contracts can actually make sure that businesses who say that they're supposed to do something are actually doing them. And a lot of businesses don't not do things because they don't want to. A lot of businesses just don't have ways of tracking it, et cetera. So I see smart contracts in the legal industry and tangentially then the accounting industry, et cetera, getting touched. And any lawyers or accountants in the room that are not already studying smart contracts on top of blockchains will get disintermediated, and they're going to get obviated in the next 5 to 7 years. So it's something for you guys to absolutely look at.
That's kind of interesting how you mentioned the legal industry. So Cooley was, I don't know, they were sort of the spearheading of ICOs, and so this is what we're hearing in the street was that if you're backed by a reputable law firm, you're okay, right? And the SEC is like, okay, well, this law firm, this law firm, then we don't have to delve in. But it's those like small actors where it's like, oh, we're going to raise $300,000, and then boom, they leave, right? But now they've sort of halted all ICOs, and you kind of see this. It's kind of funny when you say disrupting it. They're disrupting that industry in other ways as well. But I wanted to go back to back to my story with South Korea. And so like Bernard had told me there was something very interesting. He's like, we're a panel, and we got some distinguished speakers here, and so he was saying that when he was meeting some of the millionaire cryptocurrency investors, right? Like, he kind of chuckled because it was like, who do you think who are making a killing in this, right? Trading, and I was like, I don't know, they're probably Wall Street guys or whatever. He's like, well, if you rewound back, say, into the 1980s. And you're going to see who the mass adopters of like Betamax is and DVD. Who would you think? It's like, And I was thinking about it. I was like, well, so back then it was basically porn producers, right? And so, right. And so now, these were sort of people that made a lot of money. And he was saying 95% of the people that was meeting, and he meets like probably 1,000 blockchain startups and whatnot, and angel investors. They were sort of nefarious characters before with the Silk Road and all that stuff. And that's where they kept their coins, and that's why they were making a lot of money off of that. So it's kind of interesting to see that. Right?
It is very interesting. I mean, online payment was because of porn. I mean, that is a factual statement, and you're seeing the black market play the way they do, but it is a starting point to just legitimize the transaction to occur. That is a real transaction. So with that said, let's open it up to some questions.
One of the things you mentioned was the veracity and validity of when someone on their computer makes or does a transaction. How does one deal with a computer that's hacked either physically or remotely?
Yeah, so in the end, the way that works is that if your computer was taken over by spyware or something else and cryptocurrencies were stored on your machine, those can be taken and stolen. Or what normally happens is a denial of service or an injection attack occurs. So you could log into someone else's machine that's now been compromised. I, as a hacker, can go in there and using his participation in the blockchain, I can inject new things or I can pull things out, but that will be marked as him. It won't show as if it was done unknowingly, but that's why you saw a couple of companies today focused on the security on the blockchain. So with the blockchain, it'd be similar to if somebody went and defaced a building. You could deface the data associated with blockchains, but like you see what Raj is talking about with HealthWiz, they're not actually keeping the data there. They're keeping the keys and the access rights associated with me allowing you to do it. So the blockchain design, in the case of Ethereum, Bitcoin, et cetera, they're not natively aware of the kinds of transactions they run. They're data networks. The key facets of those are that you can always rewind, though. Like if somebody was messing with a smart contract, you could rewind because you have immutability. What you don't have today in a centralized model where you have to believe one database is any database administrator could go into that centralized database, and you saw this recently with the hacked data sets at the credit bureaus. Those are centralized. They're in one place. You go to one place, you can grab everything that you need to. So you're still worse off. It's no worse off with blockchain. In fact, it's better off in the future with blockchain than you are in the normal centralized models today. So same problem, but better because you can unwind, better traceability, better just general integrity of the data. So you can't go into past data, change it, and say that now somebody had $1 million instead of 10, because that's not possible with the blockchain models that we have today. And they'll get even better with quantum computers in the next few years as well.
Actually, I wanted to add to that because those are sort of the startups we're looking at is the wallets. And so that's where the weakest link is going to happen is, just like where your private keys are stored, so you can't, social engineering, right? Like, how do you prevent that from happening, right? Like, so, I'm on AWS all the time, and that's sort of run on, private keys to get access to the server. Someone can get to my password and phish me that password, right? And then I put it in, and there you have it. They got it. So the question is that how do you secure those private keys onto those clients, those wallets? So I think that's going to be some interesting development in terms of innovation for startups.
Yeah.
You mentioned it's disintermediation. Why would the government give up power willingly like that? And then the second part of that question is big companies that have, like Google, Amazon, that have all this computing power and data, why wouldn't they just come in and dominate this space?
So one of the reasons why your Googles and et cetera are not coming into this to dominate it's disintermediating them and it's disrupting them. There is no scenario where you're going to see existing players coming in and making blockchain happen for disintermediation purposes. So you have private blockchains, IBM, Microsoft, et cetera, are creating private blockchains on Azure, et cetera, but they're helping businesses create their own private for logistics, supply, other normal business reasons. I mean, this is not a conspiracy theory. It's just that there's your Amazons, Microsofts of the world, like the current world, because centralization, full intermediation makes them more useful. In the New World Order, they don't have as much of a play because these kind of technologies, the new kind of technologies that we need in the 100-year world that Brian is thinking of, do not need the Amazons the way that they are, the Microsofts the way that they are, et cetera. So they're not going to allow, governments certainly are not going to give up power, but you do see, you heard a reference today with land deeds and those kind of things. There are people who are like the Estonias of the world, and there are counties in the United States that are looking at blockchain because it's more efficient. So that natural course to efficiency is happening, but you're exactly right. I mean, there's a whole 10 or 15, 20-year cycle where governments are going to get disrupted in certain ways, and then they'll use blockchain to reassert their capabilities. And then they're going to be disintermediated in many ways, and they won't care because the tax revenue isn't there, so they're not going to really mind that going away. But there are certain kinds, like fiat currency, et cetera. I mean, there's going to be tooth and nail fights to make sure that doesn't go away for the reason you're saying.
And just to add to that, I agree with Shahid. I think, and I've spoken to a lot of people at Google, Amazon, and of course, they might not be telling the truth, but my impression is that they're looking at blockchain, but I don't think they're actively investing in a big way in blockchain technology. The only big companies that are doing anything with blockchain sort of in a public way are companies like Microsoft and IBM. But I haven't heard Apple or Google and Amazon doing anything with that. And as far as the government is concerned, I think even those functions in government that can be disintermediated will be. It's just a matter of time. Well, it doesn't mean that the government is going to go away, but there are lots of inefficiencies in the government, a lot of intermediaries that don't need to be there because of technology, and I think those will be disintermediated over time.
How do you protect intellectual property?
So the way that you protect intellectual property is, I don't know if you saw the Loci presentation this morning, they've actually built an entire business around that particular thing. And so there's three things to look at with intellectual property. Number one, is the idea unique? Is the idea something that can be well-defined, well-designed, and communicated? There's nothing that blockchain is going to help you with there. The second thing is being able to, quote, register. So I've got 15 patents to my name, so I've been through this process a number of times, is that once I come up with the idea, then me being able to say that I've registered it and I know that the idea has been presented and preserved becomes something that the U.S. Patent and Trademark Office through our attorneys have to do. But if there's some way of being able to do that publicly, that's great, and that's what you see the Loci the Loci service being very, very useful for. But probably the best thing is that the last probably year and a half to 2 years as a patent holder of a multiple patent portfolio, monetizing it and figuring out how do I license it, who do I offensively go after, who do I defensively try to prevent against. There are companies like PatSnap, Loci, et cetera, that are sitting there building that next generation world. So the ideation part itself is not changing much. The registration part is starting to get better and better. But that monetization, the licensing, the offensive versus defensive, that's still a struggle. I mean, there's no real easy way to know about valuation. There's no easy way to understand how to monetize it. So I don't know if anybody's going to be able to figure that out within a reasonable period of time. But the middle part, management of those intellectual property, registering it and knowing that it was yours and not someone else's is really nice. Because today, as a startup, if you were to go talk to 10 different companies and give them your ideas, et cetera, if you haven't pre-registered those in a quiet enough manner, those can be, quote, stolen or how should we say, misappropriated by other larger companies. So I don't think blockchain is going to do anything necessarily there except with the smart contracts piece where you can pre-register, make it visible, and know that we're all looking at a common chain of intellectual property.
So I'm going to throw something out to you about that. I'm an ex-patent examiner, 7 years ago. Do patents really matter, especially with software and business method? Do we, in this very rapidly changing digital world?
It matters even more than it has in the past, and primarily because the offensive nature of companies going after you to keep you out of your own business. I mean, one of the reasons I patent is not because I'm trying to go beat somebody else. As a fellow software engineer, if somebody came and did that to me, I'd be both offended and upset. So I don't do it for any other reason except to make sure that someone else can't come to me. And at some point, I mean, I've monetized a couple of mine to very big companies, and it's nice to be able to say, look, I was able to build something, and now someone else who wants to profit off of that gets to pay me for it, so there's some value there. But I think it's more important than ever to be looking at IP because it'd be like, remember in the 1900s, the USPTO director at that time said, we're so advanced, almost everything that needed to be invented has now been invented. That was a famous quote by the director of the USPTO in the year 1900. That's what we're saying. We think we're so advanced today. Yeah. We don't know crap today yet, right? I mean, there's going to be a lot of stuff coming out, but protection is important.
I see, Raj.
Yeah. We have a very different take on intellectual property. This whole community that's involved in blockchain and cryptocurrencies tends to be very, very open and transparent. I mean, we are using each other's, open source. And if I look at what we are doing today, I find it hard to actually patent anything in terms of what we are doing. Really, the value is that can we have consumers treat their own medical records as digital assets? I mean, that's really whoever manages to do that first, wins, right? And then the other aspect of this is that we actually look at our token essentially embodying intellectual property. If our token is successful, that gives us the leverage against big guys, small guys, because the acceptance, the utility of the token, I think at the end of the day, that's what matters more than filing a patent, because I've done filing of patents before. It's time consuming, it's expensive, engineers hate it, and we just waste a lot of time doing it, and a lot of times it's really things that you are doing from an open source community standpoint. Why bother?
Yeah, the only thing there is I completely agree. As a fellow software engineer using a ton of open source, the idea, like what if I write code and it goes up on GitHub, no one gets to question that. I wrote that code. I may not sell it. I may not beat you over the head over it. But knowing that you created it and it's yours and it's your idea is important. And that's what I mean by intellectual property protection is that. It's not that I need to necessarily monetize.
So we got to wrap it up. But I know, Brian, you seemed antsy to say something. So I want to let you do that.
No. Because this is what I always do at Startup Grind. Like all those people that leave out there, I want to reward you here for information. That's not inside information. No, so there's information that I got at our Startup Grind conference. Lou Clausen, who's the Bitcoin executive director, he talks to a lot of people. And so one of the questions they asked him, that was the last question, where do you think Bitcoin's going to be in a year from now? And he says, December 31st, where is it going to be? 2018. Quote unquote, you guys can take it and don't share it with those people out there. He said it's going to hit 40,000. So you can take it, for face value. So just everyone be quiet when you go out there, okay?
It's on the tape, so you're going to look like a genius in a year. But let's give it up for our awesome panel, guys, really.